plenty going on. But first, I should say a massive congratulations to any silver bug out there. Of course, the big news, arguably in two big pieces of news actually in the last couple of days has been the gold price in US dollar terms, going above $4,000. So again, quite a big psychological barrier there. I would say it continues to go onwards and upwards, but we've had a little bit of a dip today at the time of recording, and arguably silver. So congratulations to any silver bugs out there at the time of doing this. It is over $51 an ounce. Now, that doesn't mean that both of them are going to fly to the moon from here. There is a hell of a lot of enthusiasm out there in the markets at the moment, in the gold and silver markets, and that's understandable. We've covered ad nauseum on the channel before what is happening and why it is happening. So the fundamentals, just a reminder, if you're not familiar with them, if you look at the fundamentals for gold, you're going to look at currency printing, we're going to look at potentially the Federal Reserve reducing rates again at the end of October. So this is adding fuel to the fire. Therefore, is gold going up in price? Well, the argument would be it's actually in this case, dollar going down in value. What is interesting on top of all of that, from a gold perspective, is that central banks have got back to buying gold. I think July, if I'm not mistaken, was quite quiet. August and September, they certainly bounced back. Do as the central banks do, not as the central banks say. So there is plenty going on at the moment. Apologies if the internet connection is a little bit dodgy as well. If there's any issues, do let me know in the comments. I'll do my best to work around that this morning. So the fundamentals for gold are not going to change, and no matter what happens, it is not going to change. What we haven't seen too much of, and admittedly, with government shutdowns and so forth, is that there is geopolitical risk out there. That's not going to go away anytime soon. But that is recently, again, with US government shutdowns, and I know that things have been going on around the world. Those geopolitical tensions, once they flare up again, that's going to help the gold price push higher. So what I would say is congratulations for anyone that's been holding, anyone that's going to continue to hold as well. It's important that if you're taking a view from a physical point of view, i.e. you want physical bullion, you want to hold physical bullion, I would say just dollar cost averaging is going to be the way forwards. $4,000 gold is probably nothing in comparison to what it could be moving forwards. $51 silver, I should have said, that has taken out the nominal high from 1980, which is fantastic news. But I know previous podcast guest Lobo Tigre, he done an inflation calculator, and if you do the inflation adjusted high for silver, then that should be around $210 in today's prices. Obviously, we are nowhere near that, being at just over $51. I want to see where gold and silver close this week. I want to see where they close today and this week as well. What I would say is, if you're yet to subscribe to the Contrarian Capitalist, please do so, and do become a paid subscriber as well, because you'll then have access to the commodity wrap, where we deep dive into the commodities every Friday, and of course plenty going on this week as well. Now, if we look at one of our sponsors, Polymarket, that's again, thank you to Polymarket. If we look at one of their charts, and it is what price will gold close at in 2025. Now, of course, this is always chopping and changing. At the time of recording this, it is for the odds of a close of above $4,000 in gold. 71% of people say yes. Obviously, 29% people say no. Now, I'm not convinced personally that it's going to close above $4,000 at the end of the year. I've said in the last few weeks, they wouldn't surprise me if the gold price went above $4,000 before the end of the year. And we have seen that. We're literally sitting through that right now. It doesn't mean it's going to close at the end of the year. So I think that taking the no on this is quite interesting, to say the least. Of course, I could be completely wrong. I don't have a crystal ball. But remember that the end of year gold price is always a very important price, because it normally sets up what's going to happen the following year, i.e. the closing price in 2025 will have potentially a significant impact on what happens to gold in 2026. So yes, going to Polymarket, a big thank you for sponsoring this video. Also, I would suggest you go and check out the market as well. I'll put a link in the post that comes with this video. If we look at silver and what's going to happen next in silver, we're just looking at the chart. So what seemed to happen earlier on in the morning, it seemed to actually go over $52 spot. It's cooled off quite nicely since then. Again, it's around $51 at the time of doing this. And what we have to look at, because there is a correlation between the dollar index and precious metals, and we're seeing that the dollar index this week is actually spiking up. So it's sat at 99.24 at the time of doing this. So normally, if you have a stronger dollar index, that normally puts pressure on the precious metals and vice versa. It's not a perfect correlation, but that's normally what happens. So we're seeing that the minute that the dollar this morning started to spike, then funnily enough, that's when that sell-off occurred in silver, especially. So there's a lot of things at play going on. I asked in the question for this video, what happens next? And I think it's a very good question, because whilst I think we could all agree that the long-term outlook for gold and silver are very beneficial, many people, myself included, have said five-figure gold, is very likely to happen. Triple-digit silver, very likely to happen as well. So I don't think many of us here would disagree with that in the long run. People like Don Durrett, people like Gary Savage, both previous podcast guests, have indicated that they are looking at between 2028 and 2030 for the end of this commodity super cycle, or certainly in gold and silver. I think that's the time frame that I would agree on, and these are gentlemen with many more years of experience in this sector than myself. So that's the time frame we could be looking at, and both of them have said five-figure gold, triple-digit silver, very possible. So if we take a step back and look at this is why I say there's always a physical perspective and a trading perspective. So if you're looking at acquiring physical bullion here, and it's, again, I'll keep the numbers simple, let's call it $4,000 gold, $50 silver. If you're looking to continue to add to your position, or you're looking to start a position, then absolutely be my guest. That's not a financial recommendation, but certainly dollar cost averaging in at these prices is going to be okay, because you might catch $50 today. It could be $55 next week for all I know. It could be $45 next week for all I know. But if you're of the belief that silver is going to go to triple digits moving forwards, and again, within that 3 to 5 year time frame, what is $50 when the price is $150, for example? It makes you look like a genius. It makes all of us look like a genius when that happens. The same with gold. You can, at $4,000 an ounce today, you could buy an ounce today. If in 2 years' time, that is worth $6,000, happy days. That's all I can say to that. So again, you have to do your own homework. You have to do your own research. I'm not sat here saying to you, you must go and buy physical gold. You must go and buy physical silver. I'm not saying that. What I am saying is always have a plan in place. Have a look at what's happening. Have a look at what's happened before in historical terms. Despite the dollar index being up, have a look at what the Federal Reserve are likely to do. Have a look at what the other central banks, Bank of England, the ECB, are likely to do. They are likely to cut rates. Now, that makes no sense in this environment. In an inflationary environment, cutting rates when you're looking at all-time highs in the stock markets as well, which we'll get onto in a bit. When you look at all of that, it makes no sense to cut. I'm in the Peter Schiff camp. You need to increase the rates from here. But they're not going to do that, because the only way, and again, with the dollar being in a secular bear market as per Luke Roman, the dollar will go down eventually. It will continue its slide down. I know we're having a good week here thus far, but it will continue to slide down. That means that's going to put pressure on everything else. And that's going to have a massive impact on a variety of prices. The point being that if you're in that sort of environment, reducing the interest rates or cutting the interest rates, you are just adding fuel to the fire. And that's going to, pardon the pun to an extent, it's going to make things explode much higher. Which is why, is the price of gold going up? Well, no, it's actually the value of your fiat currency, whether it be dollars, pounds, euros, going down. So there's a big difference there. There's a big difference in that way of thinking. What I would say, as usual, again, is a $4,000 gold and at $50 silver. Yes, in the long run, it's got room to run. I am a believer it's got a lot of room to run. Doesn't mean it's going to go up, in a straight line from here. That doesn't normally happen. But if you're looking to take a physical position or add to your physical position, at these prices, do you know what? It's not the end of the world. It really is not the end of the world, especially if you've got a bit more of a long-term game and a long-term plan. I know people have asked me privately, Rob, what's your long-term plan, or contrarian capitalist, I should say, what's your long-term plan? I'm keeping an eye on that gold and silver ratio. That's what I'm doing. The bigger play that I have is silver, and I'm looking at that ratio to get down to 40 to 1 first, 30 to 1. Ultimately, I think it could go down to 15 to 1. And then for myself, I'll have a look at what the world looks like at the time, because the exit strategies would be to do a couple of things. Number one would be to go into gold, first of all, potentially. Secondly, would be to look at the bond market at the time. Now, thirdly, would be sell up, buy a bunch of land, buy a bunch of property, without mortgages or anything like that, and happy days. Or option four could be, again, you could go into that stock market, because at the time that gold and silver are up there, I imagine the stock market's going to be about down there. There's a big difference there. So you can just rotate that capital into something else. That's my personal plan. And people have asked me that before. I'm also working on an article about the big opportunity that will come in bonds. And now bonds, if you're not familiar with the late 70s and 80s, when, funnily enough, that's when the last time we saw around $50 silver, that nominal high from 1980. What was happening in the bond markets, certainly at the start of 1980s, was that a US 10-year treasury had a yield of about 15.6%. Now, different treasury amount lengths had higher values, but let's take the 10-year US treasury. It was about 15.6%. Now, at the time, of course, gold was ripping, silver was ripping as well. Inflation was running hot, double-digit interest rates in the USA. Bonds were unloved, they were disliked, almost hated, you could say, but there was an opportunity. And if you would have locked in at that time, you might have been a bit crazy for doing it, but if you locked in 15.6% per annum on a US 10-year treasury, you would have looked like a genius. Because what happened in the 1980s, admittedly 1980 remained quite high, but for the rest of the 80s, the bond yields went down. So it meant that when the bond yields were about 6% later on in the 1980s, if you're sat there at a 15% yield and you put in $100,000, for example, well, you're earning $15,000 a year, easy peasy, backed by the US government. So that is one opportunity I'm going to be looking at moving forwards. Now, of course, if we have a currency reset or if the dollar completely goes skew with, I have no idea what's going to happen between now and then. But if there is an option at some point down the line of having or going into the bond market, then I would be looking at that. I just want to make that clear. I'm not looking at that right now, but I am researching it. I'm writing about it. I'll aim to get that post out, I think, next week or in the next couple of weeks. So do keep your eyes on that, because that is a massive opportunity that's likely coming down the road. And again, we are years away from that, but this is what I mean by having a plan, thinking a bit ahead of the game. That being said, I should go back and point out, when I say what's going to happen next in what I think is going to happen next in gold and silver, it's very buoyant out there. There are a lot of people commentating on it. Everyone is getting very excited. It would not surprise me at all to see them go down, to see a pullback. I know people will look at the RSI and they will say, well, silver's overbought, gold's overbought. That is true, but they are overbought with very good reason. We should probably be due a correction, and I think that will happen. So again, if you're looking at the possibility of a correction, but your plan is to dollar cost average in, then fine. On a physical point of view, that's great. Do what you need to do it when you need to do it. It doesn't matter if it's $50, $45, $40, $55 cost average in. However, if you are watching this and you trade the markets, I would be acting with extreme caution at the moment. I'm not going out there and saying short gold and silver, but I would be acting with extreme caution at the moment. An intermediate cycle high and an intermediate cycle low, as per what Gary Savage said when he was on the show a couple of weeks ago. I am in that camp. We've got to get the contrarian mindset on. So if you're looking to trade at the moment, I wouldn't be going long here at all. I would, if I was going to do anything, I'd likely go short. That's not financial advice, not a financial recommendation, because there's too much hype, there's too much buoyancy. If I'm looking to add to a physical position in gold and silver, these prices are fine. They're really not a problem. You could wait for the dip, yes, but what if there is no dip? That's what you got to think about. That's why it's important to have a plan and have an idea. In a nutshell, if you're going physical, dollar cost averaging. If you're trading, trying to trade the paper markets, I would be acting with extreme caution here at the moment. Platinum and palladium, I don't have the charts right in front of me at the moment, but again, they are doing very well as well, especially more so palladium. That's had a very good week thus far. When I looked at the start of the week, it was up double digits in terms of percentage. Again, palladium has a lot of potential. When palladium moves, so it's relatively unknown or underloved. When it moves, it can also move. Very hard to get hold of the physical though, but if you're able to get hold of that, might be worth doing that. I'm going to have a quick look at the indices, the major indices, the main indices. So we've got the S&P 500. Again, these are correct at the time of recording on Thursday, the 9th of September. If we look at the major indices, S&P 500 around 67.35. That is 20 points up on the week thus far. NASDAQ back over 25,000. That is up 270 points on the week. That is 25,050-ish at the time of recording. The Dow Jones, though, is down on the week, 336 points. It is around 46,420. If you look at the VIX index, which measures the volatility, of course, of the S&P 500, that is starting to creep up. It's only at 16.86. In effect, that just means normal volatility. So that's where we're at on that side. And I mentioned the dollar index earlier on. It's now up at 99.37. So it's having quite a strong week. Again, what you could see that spike up a little bit more, maybe for the rest of this week, maybe next week as well. That might put pressure on the precious metals. It might not, because it looks like there's some form of decoupling going on there. But that being said, as per Luke Roman, the dollar is in a secular bear market. Now, I know with the dollar index, because people have asked me and called me out on this before, it's not just the dollar, it is a basket of currencies, mainly made up by the euro, actually. About 55% of it is the euro. But those currencies combine together to form the dollar index. And of course, I don't think we're going to be seeing a strong euro forever, or a strongish euro forever. Certainly not the pound as well. So yes, that's where we're at in terms of the markets. I should say, and I normally do an update with who's appeared on the show and what's going on. So there was a podcast out at the start of the week with the Wandering Investor. We were going through, or he was going through, residency options around the world. Plan B isn't for everyone. And I've had some pushback on this. If you want a plan B, they are out there. You can go and get them. But a plan B is not for everyone. But if it is for you, then I highly recommend you go and check out the episode with the Wandering Investor. There are some very easily obtainable residencies out there at the moment. And there are also some easily obtainable citizenships out there at the moment. Some things might cost six figures, but certainly on the residency side, mainly Latin America, they are relatively cost efficient at the moment. So again, those options are out there. I'd highly recommend you go and listen to that podcast. I wrote a deep dive into rhodium. I know there's been a lot of gold and silver talk this week, but I've done a deep dive into rhodium. That's available on the contrariancapitalist.substack.com. That is free for everyone. And in about an hour's time, I will be sitting down with Daniela Cambone, who you might know from the Daniela Cambone show on ITM Trading. So it's great to get her on the other side of the microphone, actually. So I'm really looking forward to recording that. I'm sure we'll be talking a lot about the gold markets, specifically the Shanghai Gold Exchange, the SGE. So again, that podcast will be recorded a bit later on today, on Thursday. That will go out to paid subscribers first before going out to free subscribers either tomorrow or the start of next week. A lot to talk about for sure. And also got some very exciting guests lined up in the next couple of weeks as well. Jesse Day is lined up. Rob Moore is also lined up for the start of November, along with Alistair McLeod as well. Tim Price will be back at the end of the month. In terms of personal plan B, plan C, because I know people ask me this as well. So yes, you'll be aware that I'm sorting out stuff for Paraguay. That is ongoing at the moment. I'm in the process of waiting for residency here in Mexico. So I am just playing a waiting game, which is why I am still here. So there's an update on that for yourselves. I should also say, as per usual, that if you are yet to subscribe to Contrarian Capitalist, please do become a free subscriber. You can become a free subscriber. Contrariancapitalist.substack.com. But please do allow me to serve you, though, at a higher level. And for on an annual plan, it's $9.20 a month. On a monthly plan, I think it's $11 a month. Exceptional value to protect your wealth, defend your freedom, and outsmart the system. Please do allow me to serve you at a higher level. In order to do that, you can upgrade to paid. What you get for that is you'll have access to the commodity market wrap every Friday, the indice wrap, the geopolitical market wrap as well, every Sunday. You'll also have access to the mid-month macro and end-of-month macro with Chris Steadley of LiveScore Commodity Corner. You'll have access to the full portfolio. Any portfolio moves that I do, they're documented as well. And also early access to the expert interview podcasts as well. They're always released to paid subscribers first before being released to the general public. I can see from the people that are watching this, there are also a lot of paid subscribers watching this. So again, what I would say, if you're sitting on the fence, please do reach out and ask, or paid subscribers watching this, please do share the love of the Contrarian Capitalist. I see that more and more people are becoming free subscribers, paid subscribers, and even founding members. Founding members is a one-off lifetime investment. Please do allow me to serve you at a higher level. And I can see a lot of paid subscribers watching this video as well. So please do at least allow me the opportunity to serve you at a higher level. As always, there'll be buttons to subscribe. There'll be a button in the post that comes with this video, or just head to contrariancapitalist.substack.com and you'll be able to sign up from there. I'll be back a bit later on with a post that comes with this video, also with Daniela Cambone. We'll be recording a bit later on, and then I'll be back with the commodity wrap tomorrow after the markets close as well. Thank you for watching. Again, let's see what happens in the gold and silver markets. Just a reminder, if you're going on physical bullion, my recommendation, not financial advice, would be if you go in to purchase physical, dollar cost averaging. If you're trying to trade this, I'd be sitting on the fence if I were you. Thank you very much. Take care and speak soon.